The Federal Reserve has just concluded their meeting. They decided to cut interest rates, and also they just got one. The Federal Reserve has just concluded their meeting. They decided to cut interest rates, and also they just got one step closer to printing a lot of money. My estimation is that it's going to be trillions of dollars in not so far future, probably 2026. So get ready for more inflation. Let's begin with the official statement from the FOMC meeting. This is straight from the Federal Reserve's websites. What I've underlined shows that the Federal Reserve has decided to cut interest rates at this meeting by a quarter point. The Fed funds interest rate is now at 4.0%. And I just want to tell you that this was expected. And as I said, nobody should be shocked by this. Now, here's the shocker to most people. However, I did warn about this last week. At this very meeting, the Federal Reserve has decided to end the money tightening. It says the committee decided to conclude the reduction of its aggregate securities holding on December 1st. This means that quantitative tightening or balance sheet runoff is now over. Okay, so what did I tell you last year? First come the interest rate cuts, then comes the ending of the tightening cycle, which is on December 1st, and then they turn the money printers back on in 2026. And the inflation's going to come roaring back with a vengeance. And how did I know this? It's because the Federal Reserve is cornered and they have no other options. So I'm going to cover that, more of that discussion in a separate video, but today we're just going to focus on that FOMC meeting. Now, I want to show you the highlights of the Federal Reserve press conference. So you have to know that the next Federal Reserve meeting is going to take place on December 10th. And at that meeting, in December, they're going to decide whether to cut interest rates again or not. Before today's press conference, there was a 92.8% chance that the Federal Reserve would cut interest rates again in December. And that's according to the CME Fed Watch tool. So the reporter asks whether it's a certainty that the Federal Reserve will cut rates again in December. And I want to show you what Jay Powell, who's the chair of the Federal Reserve, I want to show you how you respond. So please take a look.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our two goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
So as you can see, Powell says that a rate cut in December is not certain, that they have not made a decision yet about December, and that there were strongly differing views within the voting committee about whether they should cut or not in December. Now, a good question is, why is there not a consensus among the Federal Reserve to cut interest rates in December? It's because, you're going to see at the Federal Reserve, they're saying that they've already cut interest rates. This meeting, last meeting, and some Fed participants believe that we're at where we need to be at for the moment. So please take a look.
Thank you. Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction of rates is not a foregone conclusion. So in December, you said far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then?
Well, the perspectives of people on the committee that, we've now moved 150 basis points and that we're down into, you're into that range between 3 and 4 where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you can argue these positions since it can't be directly observed.
Now, as you're probably aware, you've probably heard this multiple times, the Federal Reserve says that they're data dependent, and they make their decisions based off the labor market data and the inflation data. However, because of the government shutdown, they don't have the government labor market data. And the question is, will this affect their decision in December? And I want to show you how Powell responds.
Howard Schneider with Reuters. Thank you. I just wanted you to elaborate a little bit on what you said a moment ago about the continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys or the Beige Book, do you worry at some point you're going to have to start making policy by anecdote?
You know, this is a temporary state of affairs, and we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it. And that's our jobs. That's what we're going to do. If you ask me, could it affect the December meeting? I'm not saying it's going to, but yeah, you could imagine that what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
Okay, so Powell said that they're going to collect every scrap of data to make their decision, but to the reporter, another reporter, they wanted clarity, and the question still stands. Like, is this going to affect your decision in December? So please see how Powell responds.
Hey there, Andrew Ackerman with the with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you really aren't getting information you really don't know, and the economy looks like it's solid and stable and hasn't really changed, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you slow down when you can't see as far ahead. Others may argue, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay, moving on. I want to show you this video clip. It's about inflation. Inflation has been accelerating. And the question is the Federal Reserve still committed to their 2% inflation goal? Like, that's their target. They keep saying it's their target. But is that credible, and are they still sticking with it? So I want to show you how Powell responds.
We're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that that's a credible commitment, and there should be no question that that's where we're going.
Now, in this highlight clip, I want to show you this question about tariff inflation. So Powell says that he expects tariff inflation to continue, but his expectation is that it's going to be moderate and it's going to be transitory, because he expects it to go up gradually and then plateau. So please take a look.
You also talked about tariffs causing a one-time price increase. Should American household consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation, because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects. But if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level. And then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now.
Now, let's talk about the money printing. Powell said that they're starting a new phase. First, they're going to stop the money tightening, and then they're going to move on to money printing. But how long is it going to take from going from here to there, from the stopping and tightening, which is December 1st, to the money printing? Powell said that, this pause is going to be for a time. So he kept it vague, but in my opinion, yeah, he has to keep it vague because they're just waiting for something to break in the financial system. So something breaks, and then they're going to come to the rescue with money printing. That's how it works. So please take a look.
Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing.
I want to end with this video clip. Powell says that people are unhappy about the inflation situation. But Powell says that, as you're going to see this for yourself, he says that once people's incomes catch up to inflation, they're going to feel better. But he says that that's not going to happen for quite some time. So please take a look.
Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because, you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
All right, so those are the highlights of Federal Reserve FOMC press conference.